Shares of Alphabet surging after posting a top and bottom line beat and announcing a 20-for-1 stock split. The conference call just got underway at the top of the hour. Let's get straight to Deirdre Bosa for all the details. Debo.
Melissa, a huge move in the after hours, and this quarter really capping off a blockbuster year for Alphabet. Profit nearly doubling over the year. Cloud continues to grow at a 40% plus rate year over year. This quarter, YouTube, while it did slightly miss the street's estimates, it is just $1 billion behind Netflix's annual total. And now that 20-for-1 stock split could make shares more widely appealing or accessible, as Ruth Porat told me, to a wider group of investors. Think perhaps the Reddit crowd. The call is just kicking off. I'm looking at it right now. Usually Sundar Pichai kicks it off, so we'll listen and monitor and let you know what else comes out of it. The last thing I'll mention, Melissa, is I did ask CFO Ruth Porat about the capital allocation plans, given its nearly $140 billion cash pile and, of course, the rate of inflation. She said no change in strategy. The priority is still organic growth. Some analysts had floated the idea of a dividend. No one was really holding out their breath for one. If they were, they're going to have to continue to wait. Back to you.
All right, Debo, keep us posted on the call. Deirdre Bosa with the latest on Alphabet. Karen, a stunning move in the after-hour session. What'd you like about the quarter?
So I liked the numbers, obviously. I liked the revenue. That was very good, the beat. And when you have a big revenue beat and a business like theirs with huge margins, you get a big bottom line beat. So that was nice. There was a lot to like about it. And then aside from the business, which is doing great, and that's really nice to see, there was this 20-for-1 split, which I was very surprised to see, honestly. I thought they really didn't care what price their stock trades at. And I know it's just math. It doesn't make any difference. It is the company is what it is. But the 20-for-1 split does allow a whole new group of investors, those that trade options, for example. And there are no baby shares like there are in Berkshire. So even though there are places you can buy parts of a share, this allows other investors who have sort of been shut out by the high price to be able to invest in Google. So that's really good. To Deirdre's point about the capital allocation, I'd like to hear some more about buybacks. I know they announced a big one last year. I think they have some room left on that. I would love for them to reload on that because with the cash flow generation they have, that was really only about a 1 year's worth of cash flow. And as she said, they have that enormous cash hoard. The other thing, I'm glad they don't have a dividend. I feel like when you're a big tech company and you become a dividend payer, you're sort of saying we're a little older, we're more mature. And that, to me, also signals, slower growth. So I'm fine with no dividend. I'd be happy to see a special dividend, but to not lock themselves into being a dividend payer, that's fine with me. So all that, I think, very good news, and it bodes well for the other social media, for Facebook, certainly, which is up, and, Snap and Pinterest and that whole group.
The strength in search, obviously, and ads, that's going to be a good read-through for all of those names that Karen had mentioned. So Alphabet themselves, a big supporter of the stock in terms of buybacks potentially, a new class of investors, another support in the stock. Guy Adami, I mean, there is a lot to like about this story at this point. What do you like the most about this quarter? What would you nitpick?
No, there are no nitpicks here. I mean, you talk about YouTube, and Mike Santoli just talked about. I mean, they're going to do $34 billion in revenue this year, which is, it's quite a number when you think about it. There's nothing to nitpick. What you like about this is in an arena now where valuation is clearly a concern, you can make an argument that at 25 times this year's numbers, which, if you do the math, that's what we're looking at. It's probably cheap, and that's probably just earning $120 a share. You can make an argument they're probably closer to $130, $135. So I think this stock is poised once again to trade north of 3,000. I don't think any of us have really run from this name. I was surprised it got as low as it did, and this had a $2,500 handle on it a couple days ago. But this is a great quarter.
Is this stock due for a re-rating? Dan Nathan, I mean, also when you dig down in the numbers, what was interesting in terms of read-throughs was the geographic diversity of the revenue growth. We saw 30+% growth in various geographies around the world. Search, obviously, the strength there indicates also strength in travel and sort of that comeback trade.
Yeah, no, I mean, listen, both Karen and Guy are spot on with everything. There's really nothing to nitpick here. And the valuation, I see about 21 times coming into today with expected growth and, high teens as far as revenue. You saw those better than expected operating margins. I mean, it's a great quarter for a stock that is reasonably valued, versus the broad market here and many of its peers. One thing I'd say about that cash, Mel, I mean, I think this is a company that obviously is relying on mobile search a great deal. If you look at their cloud business, it's not a massive percentage of their overall sales. It's growing very nicely at 45%. I think they should test the waters with the FTC and make an acquisition. This is a company where their only real social property is YouTube for all intents and purposes. And if you think about who they're competing with and how, I think it makes sense if they had a Snap or they had a Twitter. And I know that we've been saying that for a very long time, but the FTC is going to take a look at this Microsoft deal with Activision. They're going to take a look at everything. Why not test the waters? Because if the boogeyman has been regulation for these huge platform companies for the last few years, well, there's really not much other than fines that have come their way.
That could be it, although Ruth Porter was pretty clear with Deirdre when it came to organic growth. Organic meaning growing themselves on their own. Tim, what did you make of the quarter? Do you want to see them do a deal?
No, I don't. I get Dan's point, but look, their core business in search is soaring. The ROI that's derived by the advertising community and the user community. In other words, Google is getting the most, giving them the most for their money. So digital ad revenues up 32.5%. YouTube a little disappointing, but we just talked about the scale of that business. They are the leader in worldwide digital ad. I mean, their market share is somewhere around 40% now. It's going to go down slightly in 22. Again, I just look at this company that also is re-rating, not just because the growth is staying where it is or even exceeding in the digital world, but because they are doing corporate governance friendly things. And a share split's not necessarily corporate governance friendly, but it is showing some attention to the share class investors that I think historically Google was a black box, and I think that's part of the story here. I think that's part of where we've really elevated the story, and I think we actually are getting. Ruth Porat has done such a great job in earning that multiple. That separates companies. I think Microsoft gets that premium, and at 25, 26 times, this is a growth company that's not priced like a growth company. So I say, don't change a thing. I love what's going on here.